Your bear case for Tesla is $1,400 a share.
About a third of our valuation is associated with electric vehicles, EVs. 2/3 of our valuation is around autonomous.
If it takes longer to play out, it's still $1,400. And that seems extremely optimistic.
So the data supports what Tesla is doing. 80 to 90% of all accidents on the roads are caused by human error. If you take the human being out of the equation and use AI to get people from point A to point B as safely, as quickly as possible, I think the authorities, the regulators, are going to be persuaded by the data. Autonomous is a SaaS model, software as a service model. Those margins alone are in the 80% range. So it's not just revenues, it is margins that are going to deliver upside surprises. We have Tesla, yes, going to $5 trillion.
You're talking about 5 to 10 years, at some level, an extraordinarily long time to be looking out and modeling back.
It will remain our largest position because we think the autonomous taxi platform opportunity is the biggest opportunity from an economic point of view in the next 5 to 10 years, delivering 8 to 10 trillion in revenues in the next 5 to 10 years from basically nothing now.
In today's episode of Things That Will Age Well, Cathie Wood continues to warn investors about the obscene amounts of money Tesla will be printing over the next few years. With the bear case of $1,400 per share for Tesla stock by 2027, a base case of $2,000 per share, and expectations for Tesla to start printing absolutely ludicrous amounts of money on the back of Autonomy, Cathie Wood and Ark Invest continue to bang the drum. And most investors seem to be ignoring or perhaps even pointing and laughing at Cathie Wood and Ark Invest. Probably unwise. By the way, if you guys want early access to my daily videos, head over to X and subscribe. I post early access, plus there's a bunch of exclusive videos as well. And on the theme of today's video, long-term investing, especially as it relates to Tesla, if you haven't already had a look at my Tesla valuation model, head over to Patreon and join at the investor level and above. Check out my assumptions over the next decade in the base case, the bull case, the bear case, and the hyperbull case. Or don't.
What does the road look like for Tesla? Let's bring in Cathie Wood, the Ark Invest CEO. Tesla is her #1 holding in the Ark Innovation ETF. Cathie, great to have you with us here on Fast.
Oh, I'm happy to be with you, Melissa. Thank you for inviting me.
The traders and I were talking here on the desk about Tesla and how your bear case for Tesla is $1,400 a share. Guy here said he'd take $1,400 because that's still pretty bullish.
If Tesla stock were to increase to $1,400 per share in the next 5 years, that would be more than a 5x from where it is today. I don't think too many people would be complaining about that. Before we hear from Cathie Wood exactly how Ark Invest gets to that $1,400 per share bear case for Tesla stock, I just want to point something out. Melissa Lee there was referring to the traders on the desk, not investors, traders. Two very different mentalities here, although admittedly Ark Invest do their own trading around short-term volatility, but they still have a long-term investment strategy. So pay attention, maybe we'll hear a few clues as to the short-term trader mentality of the folks on the desk here at CNBS, who historically have completely missed the opportunity in Tesla, due, dare I say, to their short-sighted nature. Let's see if there's any clues about their mentality around trading versus long-term investing.
What is in, let's just even say the bear case, what assumptions are made about its business to get to that 1,400 by 27 number?
Well, about a third of our valuation is associated with electric vehicles, EVs, and scaling them.
So again, more context. Even if Tesla weren't to solve autonomy just based on the electric vehicle business alone, close to a 2x between now and 2027. Not bad.
And as you mentioned, Turkey, a plant there, many countries do want a Tesla plant because this is the new world, right? So that's good. This is all working out. And then 2/3 of our valuation is around autonomous and autonomous taxi platforms. We think Tesla is in the pole position here in the United States.
So Cathie Wood, Ark Invest, and even the guy speaking to you right now believe Tesla is in the pole position when it comes to solving autonomy, especially in the United States. An unassailable data lead, demonstration of incredible strategy. No one else is even taking the same approach. No one has the data. But what would we know? After all, there are experts out there who tell us that Tesla is dead fucking last. No, actually. Cue the Guidehouse in Shites, I think I pronounced that right, leaderboard in automated driving systems. Now, in fairness, this is an excerpt, the most recent I can find, from a Q2 2021 report. So we'll check in and see if they've changed their tune. But the last available report, because I'm not paying $3,000 or $4,000 for this pile of excrement, more on that in a moment. This is the most recent thing available that doesn't cost me an absurd amount of money for zero value. The Guidehouse Insights leaderboard grid. As we can see here, Waymo, Nvidia, Argo AI, and Baidu are the leaders. Cruise, Zoox, Mobileye, Yandex, AutoX, Neuro, Aurora, Motional are contenders. Gatik and May Mobility are challengers, and the followers, yes, that's right, the followers, well, there's only one follower, Tesla, dead fucking last. Dead last. Okay, one more time. They have Tesla dead last. Now, if I didn't know any better, I'd think the people involved in this research were either suffering from brain damage or there were vested interests, but I'm just going to assume the former. One more time. Dead last. Worst strategy and worst execution, Tesla. Is this real life? But remember, this was Q2 2021. A lot's changed since then, so let's check out the latest information from these guys and or girls and or dumb fucks. Q1 2023. Guidehouse Insights leaderboard, automated driving systems. It has been updated. As you can see, nearly $4,000 US. No fucking thanks. So let's just look at the key takeaways here. The top 10 vendors, presumably in order, maybe not. Mobileye, Waymo, Baidu, Cruise, Emotional, Nvidia, Aurora, WeRide, Zoox, Gatik. I notice a conspicuous absence. Where's Tesla? Still not even in the top 10. What are the odds they're still dead fucking last? Who needs this report? Let's find out who needs this report. Do I need this report? Vehicle manufacturers, automotive industry suppliers, insurance companies, commercial fleet managers, taxi operators, mobility service providers, city managers, government agencies, investor community. Oh, that's me. I think I need this report, apparently. Car sharing companies, ride-hailing companies, and transit providers. Now, if anyone happens to have a copy of this report, I'll be curious to see what they have to say about Tesla. I ain't spending $4,000 for a literal piece of shit. Now, out of interest, let's have a look who we are. Who are the people behind these insights? This is what we want. One of the names on this research report. Just to be clear, the principal research analyst, at least on the Q2 2021 report, who knows, maybe that's changed since, was our mate Sam here. Sam, who, prior to joining Guidehouse Insights, worked as an automotive journalist and worked in product and technology communications at Ford and General Motors. I'm not sure why I mentioned that. It's obviously completely irrelevant. So as I was saying, Cathie Wood obviously doesn't know what she's talking about. I don't know what I'm talking about. I mean, I'm just some guy on YouTube and hey, I don't even wear a suit, so you can't trust me. Duh. But you can trust the folks over at Guidehouse Insights who are happy to sell you a $4,000 report explaining why Tesla still isn't even in the top 10 in terms of the Autonomy leaderboard in 2023. So just keep this in mind. Everything Cathie Wood says, she's clueless. No idea what she's talking about. She's not an expert. Plus, all of the research from Ark Invest is free.
It has collected more data about our roads and actually other roads around the world than all of the other companies combined. And therefore, it has more corner cases and probably will be the company that will get people from point A to point B as quickly and safely as possible. So it's a winner take most market. So whether it's our base case, that just means, okay, autonomous perhaps takes a little longer to play out, or the bull case, it happens much more quickly.
So even if it takes longer to play out, it's still 1,400. And that seems extremely optimistic in terms of even the regulatory green lights that Tesla would need for autonomy. It seems also, that the model where Tesla owners would own their cars and then they would go out and earn them money during the day by driving people around, that also seems sort of optimistic in terms of the uptake of that, Cathie. So, for 2/3 of the valuation, do you feel like that there's risk even around the bear case at all with the 2/3?
Well, actually, the risks are going down because regulators are very data driven.
Believe it or not, this is actually true. And Tesla has the receipts, as in all the receipts, as in every mile ever driven in every Tesla is tracked. They understand the rate of collisions, accidents, with and without their software enabled. Working in shadow mode, what would the software have done versus what did the driver do? Tesla has an absolute fuck ton of actual data. Interventions per mile continues to decrease. The safety profile of Tesla vehicles is already astonishing. Tesla publishes this stuff. They don't have to, and they do voluntarily. Check out tesla.com/safety last I checked. Otherwise, just search for it. You'll find it. And for a regulator who, as Cathie points out, is data-driven. To have a pile of data dumped on their desk, so to speak, from Tesla going, oh, hey guys, we've realized now that our software is actually safer than human drivers. Here's the data, hundreds of millions of miles of it. For them not then to fast-track approval of this software in the instances where Tesla can demonstrate it is significantly safer than human beings. Do you really want to be the regulator who has blood on your hands and who ends up going through a drawn-out legal process when Tesla pushes back and go, hey, we showed you the data. Do you really want to be the person or the people involved in denying Tesla's request to save lives, to prevent accidents, to prevent collisions, injury, disability, and deaths? I don't think so. As much as the media hates you and hates humanity, as much as certain companies in certain industries will do the opposite and somehow get regulatory approval for things that are less safe than the alternative, which might be doing nothing. Don't know what I'm talking about there. Let's move on. In the case of automotive regulation, safety, when Tesla has enough data and their software is safe enough and they can prove this, it's a no-brainer.
And what regulators have been experiencing, especially in the transportation sector, is that the number of auto deaths in the United States has gone up during the past 5 to 10 years from 30,000 to 45,000 after decades of falling thanks to auto safety measures. So the National Highway and Transportation Safety Board and other transportation authorities want to turn that trend back down. Why has it happened? A lot of it is because of texting, and therefore a disproportionate number of young people are dying in auto accidents.
This statistic is as stunning as it is disturbing. Now, personally, if it were only the people who themselves were taking the risk by texting and driving, deleting themselves from the gene pool, I wouldn't be particularly concerned. I mean, DMF's gonna DMF. The problem is, these dumb f***s also delete other people, innocent people. It is a big problem. The fact that safety was improving, there were less deaths, less collisions, less crashes, less injuries, less disabilities. It was trending down and now has gone in the opposite direction, is trending up. It's extremely concerning, but we do understand why. Distracted driving. No doubt regulators will be desperate for any ways to continue the trend going down rather than the way it's headed now.
So the data supports what Tesla is doing. 80 to 90% of all accidents on the roads are caused by human error. If you take the human being out of the equation and use AI to get people from point A to point B as safely, as quickly as possible, I think the authorities, the regulators, are going to be persuaded by the data. In fact, they already have been in terms of the fatalities in Tesla's cars. They examine them. They say, not Tesla's fault for the most part. And oh, by the way, people driving in Tesla cars are 40% plus safer with autopilot and FSD than in other cars.
So, Cathie, right now I think Tesla's about $850 billion company. Next year they'll do about $125 billion in revenues. Your math suggests a $4.25 trillion company. What revenue growth would be commensurate with that type of market cap? In other words, where will revenue be by that time?
So it's not just revenue growth. If you and EVs are taking share at an accelerated rate from gas-powered cars, and Tesla is evolving factories. I mean, Elon has said, I'm a manufacturer of factories faster than any other auto manufacturer, tech provider out there. So we think that that side of the equation, they've got down. The key here is autonomous margins. So you mentioned revenue, but margins are more important. Auto margins, EV margins, are in the 20 to 30% range. This is gross margins. Autonomous is a SaaS model, software as a service model. Those margins alone are in the 80% range. So it's not just revenues, it is margins that are going to deliver upside surprises.
Just like to take a quick break here to point out that Cathie Wood has said something that is true. The margins on autonomy software are going to be astronomical. And this is a great opportunity to remind everybody, just a few months ago, the number of people, analysts, big investors, folks in the finance media, and even one or two of the Jim Cramers on YouTube were freaking the fuck out because Tesla's gross automotive margins were 1, 2, 3, maybe even 4 or 5% below where they were hoping over the extremely short term. As a result, many of these folks panic sold Tesla stock, freaked out, thought it was the end of the world, decided Tesla was massively overvalued, and shared their opinions with the world. I have a sneaking suspicion a few years from now, when Tesla is printing obscene amounts of money with absolutely astronomical profit margins driven by autonomy, many of these folks are going to be extremely embarrassed that they panicked over Tesla's short-term gross automotive margins instead of understanding the autonomous opportunity just around the corner, having failed to recognize Tesla's unassailable lead. And eventually, with enough reflection, many of these folks will be sharing their thoughts. My biggest regret: panic selling Tesla stock in 2023 because I thought gross automotive margins were going to be a few percent lower than I was hoping, and I completely forgot about autonomy. I'm so dumb. And by the way, dumb is correct. You'll recall at the time this panic was taking place, I was roasting people left, right and centre relentlessly, and for good reason. This was a classic example of missing the forest for the trees and being driven by emotions rather than reason.
So to get to we have Tesla, yes, going to $5 trillion in market cap. And many people, when we first put this forecast out, said, that's crazy, that's impossible. But then Apple got to $3 trillion. And now everyone's saying, wow, winner take most, or companies that are doing something highly differentiated actually can get to those kinds of market caps.
Ah, yes. You make a long-term prediction. Most people laugh at you at the time, and they continue to laugh at you today. But guess who'll be laughing when it comes to pass? I know the feeling, Ark Invest. And for what it's worth, I personally think a $5 trillion market cap for Tesla will be just the beginning. Again, if you want to see my full estimates for Tesla out over the next decade, base case, bear case, bull case, and even the hyperbull case, head over to Patreon. All supporters at all levels can see my fair valuation out over the next 10 years. And everyone at the investor supporter level and above can access my valuation model and see all of the assumptions driving those fair valuations. It's worth mentioning once again, key insight from Walter Isaacson's recent Elon Musk biography, in which Elon was talking to Walter, just a casual conversation, in which Elon Musk pointed out that Tesla is on track to hit $1 trillion in annual profits. Now, let me ask a question. If a company is making $1 trillion per year in profits, not revenue, profits, what kind of a valuation might that company have? For a little bit of context, a slow-growing company called Apple, today worth almost $3 trillion, last year, for the full year, did less than $200 billion in profits, as in less than 1/5 of what Elon believes Tesla will be doing in the future. And they're a $3 trillion company, a slow-growing one at that, with, let's be honest here, zero innovation. Just saying.
So our revenue growth is in the 50% plus range over the next 5 to 10 years per year as EVs take over the market from gas-powered vehicles.
Hey, Cathie, it's Tim. Thanks for joining us. And, you're talking about 5 to 10 years, at some level, an extraordinary long time to be looking out and modeling back. But
somebody just here, a trader, talking about a 5 to 10 year time frame and describing it as extraordinarily long. That's like calling a fucking 1.5 incher extraordinarily long. Wait, what? What I mean, my point is the trader mentality versus a long-term investor. Now, it's true. The further into the future one looks, the less certainty, the less clarity, the more uncertainty. It's very difficult to predict things. However, if as an investor, not a short-term trader / gambler in the stocks casino, you're not looking at least a decade into the future, and as far beyond that as you reasonably can, you are doing it wrong. Speaking of doing it wrong, does anyone remember people panic selling Tesla stock near $100 per share not long ago? Guess what? Micro penis length time horizon. Don't know how else to say it. Were these folks looking 5, 10 plus years into the future, as opposed to looking 3 seconds into the future, panicking, crying and asking for daddy to hold them? I don't think many of these people would have made the same catastrophic error of judgment, driven by emotions and fear, rather than some long-term thinking. It is my opinion that investing is a lot simpler than most people believe. The problem is most folks do not have a long enough time horizon, don't assess opportunities over a long enough time horizon, they don't have any perspective, and they often, almost always in fact, miss the forest for the trees. How many people do you know today who deeply regret not recognizing a certain long-term opportunity? And how many people do you think 10 years from now will deeply regret not recognizing the opportunity that laid in front of Tesla over the next decade? For what it's worth, I'm not going to be that guy or girl with any regrets. I've been buying Tesla stock with every spare cent for the better part of a decade. Why? Because I continue to look out for the better part of a decade into the future and think, oh shit, still a bargain, bro. Keep buying. Now, this wasn't always the plan. I didn't expect that Tesla would continue to stack another S-curve of opportunity on another one and another one. When I first started investing, I was not thinking about Dojo as a service or humanoid robots or AGI. But this is why I continue to look out into the future, more than a decade. And I am absolutely not going to have a single regret when it comes to Tesla. How many others will be able to say the same?
This is part of how you invest. And if I look at the innovation fund, there's no question that you are investing for the long term. And I guess that's my question. How do you think about short-term tactical versus long-term being invested? And for investors who own your fund and who look at performance, and you've had some great years, you've had some difficult years. This fund is down 1.32% on average over the last 5 years. The stories you're talking about are long-term growth, exciting stories. Help us understand that a little bit more.
Well, first, let me put in context that 5-year number, because, our expectation is that we will deliver a 15% compound annual rate of return over the next 5 years. Why did that not happen over the last 5 years? The biggest reason is an increase in interest rates, 23-fold, over much more than 1 year's time. Never seen that in history, actually.
So this doesn't happen too often. When it does, I love to own it. I was so wrong about interest rates. There was no way in my mind that interest rates would increase by 10-fold or more, let alone more than 20-fold in the span of about a year. I just couldn't fathom. This was not in any of my scenarios. You'd have to run at least 10,000 individual versions of this simulation for a single instance of something like that happening. The insanity. I still can't believe it happened. Yet here we fucking are. Not in a million years could I have foreseen this. Yet it happened. And I got to be honest, this, in my opinion, was a gift from the investing gods. P.S. Shout out to the flying spaghetti monster, the one true god. The reason this was such a gift was a widespread panic this caused among investors and algorithms, big institutional investors in particular. People freaking out and dumping incredible growth stocks. Remember, wasn't that long ago that Tesla stock was close to $100 per share, down about 75% from all-time highs. That didn't make sense at all. Nothing at all changed about Tesla, the company. Nothing fundamental changed. What changed? Interest rates went through the roof. Investors panicked. Oh, interest rates are high. We have to sell growth stocks. Now we're going to buy value stocks instead. Pre-programmed potato investing. What do we do when rates are high? Oh, okay, we'll do that. As opposed to looking out into the future, 5, 10 plus years and going, hang on a minute. Nothing's changed about the investment thesis. It's going to be some short-term pain, but that's a blip on the radar. Okay, Tesla's 3 quarters off. All the better. I was so very wrong about the level of interest rate rises that were possible. Just completely off the mark. I just did not see this coming, yet it happened. Very valuable lesson. I was super wrong. And the stock market is still feeling the effects of this absolute insanity. Although, you know what happens when things start going the other direction, right?
And that interest rate increase was very difficult for any long duration strategy, including long-term bond strategies. Bonds had their worst year in 2022 since the 1700s. Bonds are usually supposed to protect investors. But when interest rates are jacked up by 23-fold, this did not even happen under Chairman Volcker in the early 80s. His yields went up 2-fold. This is 22, 23, 24-fold. It was going to be a killer for our kinds of strategy. We think they've overdone it, and we do think the next big set of moves during the next year, I would say, are going to be down. And if interest rates, the fear of interest rates going up and interest rates actually going up hurt our strategy that badly, then I would expect the opposite to happen the other way around.
So, can you read between the lines?
So now your question about how do we think about short term? Disruptive innovation is inherently controversial. You've got the old guard. Take the auto industry. When we first started modeling Tesla, or when we started Ark in 2014, and we were putting out our forecasts, everyone dismissed them. Electric vehicles weren't going to be a reality in any kind of meaningful sense for the next 10 to 15 years. That was wrong. And we were right on that. But because it is so controversial, we get great trading opportunities. And so you will see us buy Tesla when everyone is hating on it. It will remain our largest position because we think the autonomous taxi platform opportunity is the biggest opportunity from an economic point of view in the next 5 to 10 years, delivering 8 to 10 trillion in revenues in the next 5 to 10 years from basically nothing now.
Oh, is that all? You got a feel for Cathie Wood and Ark Invest? They publish research, people point and laugh. That's absurd. That'll never happen. You're idiots. Elon must be paying you. Then a few years later, oh, well, that was just a lucky guess. It's not like they're going to be right about their next prediction. And here we are. Cathie Wood banging the drum. Hey guys, winner takes most market. Tesla has more data. Autonomy, $1,000,000,000,000 opportunity. Trillions of dollars just in the next few years. By the way, our bear case, $1,400 per share in 2027. Base case, $2,000 per share. Interest rates went through the roof. They're probably going to come down. And if they're right, Tesla's currently around 800 billion and on its way to 5 trillion or so. That's a pretty decent return over the next 5 years. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy. Wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, This is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.